Hello, everyone. Thank you for joining us on the DST Essentials with Kay Properties and Investments, an in-depth look at all of the Delaware Statutory Trust and the 1031 exchanges. This is Nick Snyder, Associate Vice President with Kay Properties and Investments. We will begin with the risks and disclosures. This material is not tax or legal advice. Please speak with your CPA and attorney for tax and legal advice. All offerings discussed, if any, are Regulation D 506C offerings, which are solely available to accredited investors, generally described as having a net worth of over $1 million, exclusive of primary residence. Please verify with your CPA and attorney if you qualify as an accredited investor or entity. The information is educational only and is not an offer to purchase securities or DST properties. Such offers are only made through private placement memorandums, which are solely available to accredited investors and encouraged to read through. Past performance does not guarantee future returns. Diversification does not guarantee profits or protect against losses. Returns are never guaranteed and could be lower than anticipated. All real estate and DST properties may go down in value. Securities are offered through Finex, member FINRA and SIPC. Finex and Kay Properties are separate entities. Thank you, everybody, for listening in. And now I'd like to turn the call over to Dwight Kay, CEO and founder with Kay Properties and Investments.
All right. Thanks, Nick. Can everybody hear me?
Yes, we can.
Okay, great. Thanks, everybody, for joining us. Thanks, Nick, for the intro. As Nick said, this is Dwight Kay with Kay Properties. I'm the founder and CEO of Kay Properties and Investments. We really appreciate each one of you for joining us on the call today. I'll give a quick overview of Kay Properties, kind of who we are and what we're doing, and then we'll talk about a couple specific opportunities that we have for our 1031 exchange as well as cash investment clients. And then I'll go over kind of a little bit after that how we can help you in your particular situation, or hopefully help you in your particular situation. So again, really appreciate everybody for joining us today on this call here. So, Kay Properties and Investments, we are a expert real estate investment firm specializing in Delaware Statutory Trust investments for 1031 exchange investors. So that right there is pretty rare to be a specialist in the DST space. And when I say specialist, the reason we are considered a specialist is because we're pretty much the preeminent firm that has done the most of these out of anybody else that is working with investors directly, helping them exchange into DSTs. Our team has over 300 years of combined real estate, DST, and 1031 exchange experience. We've helped thousands of clients nationwide purchase over 9,100 DST investments over our time in this space. So 9,100 specific investments into DSTs. It might have been somebody investing $600,000 or $25,000 or $6 million. We've helped clients, purchase $50, $60, $70 million of DSTs on their large 1031 exchanges. And then we've helped clients that have had, $8,000, $9,000, $10,000, $12,000, $18,000 lot sales of, vacant land that they've owned for 20, 30 years. So we work with clients across the gamut, and we think that really provides a lot of value to our investors because we've seen a lot of exchanges. We've seen a lot of different investors. We've worked with very large institutional firms that have placed, tens and tens of millions of dollars with us, and then also, smaller mom and pop investors that, just started buying single family rentals over the years and amassed a portfolio of properties. So we've kind of seen it all. We've worked with thousands of investors throughout the country, and over 9,100 DST investments. And, at Kay Properties and Investments, we participated in, so been involved in over $39 billion of DST real estate programs. So that's a lot different than a lot of the other groups out there. A lot of the other groups, they've, been doing this for a couple of years, maybe 3, 4, 5 years, but they really haven't seen the cycles. They haven't seen, the ups and downs in this space. When I started in DSTs, that was back in 2007, working in DSTs. But prior to that, I was in commercial real estate at a large national brokerage firm working there. And so been in real estate for a long time, but nearly 2 decades working with DSTs and 1031 exchange investors. And so that's how we've built the KPI1031.com platform, is through a vast amount of experience. So The first DST that I personally invested in was in 2008, I believe. And it was a small investment, just got married, just getting started. But really, that was a really kind of foundational investment for me. And I realized this is what I want to specialize in. This is what I want to do. I want to be the best at DSTs because I really believe that they could fit a need for clients, that people needed help in this area and they needed a specialist. There wasn't anybody that was going, this is all I do is DSTs, right? There was just, people that are managing stocks and mutual funds and life insurance, and they did one or two DSTs or 1031 exchanges a year. That's hardly a specialist. And so, I set out to build a platform that really was best in class in the 1031 exchange space, in the DST space. And, what we've done, and obviously, I've been very blessed, and this is all the Lord's doing, but what we've been able to do is pretty remarkable. It blows my mind. Our team that we have, you guys have seen our website, you've seen the team on there. Phenomenal group of people, phenomenal group of experts and specialists, and each one of them have done hundreds and hundreds or thousands of these DST investments on hundreds and hundreds or thousands of 1031 exchange investors nationwide. So we've got a deep knowledge base. And, fast forward, so 2008 was the first time I invested in a DST, and actually I invested $1,000 because I wanted to eat my own cooking. And, I got from that sponsor, I got the minimum investment waived from $25,000 down to $1,000 because that's all I could afford. But I wanted to eat my own cooking and be right there with my investors side by side. Fast forward, built the KPI platform, built a sponsor company, Cove Capital, which I'm going to talk about in a second. And then on top of that, I've personally invested, my wife and I, just like you guys are considering on your end, I've personally invested in over 90 different DST properties, And that's from multiple different sponsors all over that nearly 2 decades of experience of working with DST. So I have seen X, Y, and Z, A, B, C, X, Y, and Z from these sponsor companies. I know them. I know their track records. I know that what they've done in the past. I know what they're good at. I know what they're not so good at. And I have passed that down to my team so that it can be passed down to our investors. And we can help our investors look at these things in a way that, in my opinion, really makes a lot of sense considering the history of the DST sponsors out there in the marketplace, the history of how they've performed, of these different asset classes, of these DST properties in my own portfolio. So over 90. I don't think there's anybody really in the world that has invested in more DSTs than I have. And I'm not saying that to brag. I'm saying that because I want to share our knowledge and what we do and what we know about these DSTs with you, with our clients. That is my passion, to help you make the right decision for your particular situation. So, in K Properties, we're a little different, than a lot of groups out there. K Properties is not a sponsor company, K Properties is a platform through the KPI1031.com platform. It provides you access to the marketplace of typically 20 to 40 different DSTs at any given time. That number can go up and down, but typically 20 to 40 different offerings from over 25 different Delaware Statutory Trust sponsor companies, So these 25 sponsor companies, they are, in the market, they're putting together DST offerings, and they're bringing them to K Properties, wanting us to raise capital for them, A lot of deals, based on my experience of investing in more of these things than pretty much anybody, there's a lot of deals that you don't even see. You won't see on our platform because our team has deemed them, and myself personally has deemed it way too high risk and not proven out, where I wouldn't want to put my own money into it. And so we're not going to have our clients putting money into that. And that really, proved that process really worked well for our clients, especially during the coronavirus, that we rejected various asset classes like hotels and senior care, because those asset classes during the coronavirus pandemic really got hit hard. And the reason why we rejected them in the coronavirus, because back in 2008, 9, and 10, I saw those asset classes when I was working with DSTs back then really get hit hard, and investors suffer. And so I decided we're not going to work with that stuff. So But, fast forward, our platform, our marketplace provides access to over 25 different DST sponsor companies. It might be a sponsor that we've worked with many, many years, and we've raised hundreds of millions of dollars for them, but they might roll out a deal, an offering that we just don't like, we don't think makes sense for our investors. It's a style drift, whatever the reason is, and we won't participate in that offering, okay? And so that's who K Properties is, and that's who you're talking to when you're working with, Shay, Jason, Betty, our managing directors, and Shay is our president, all our senior vice presidents, Steve Haskell, Matt McFarland, Oren Barrow, Alex Madden, Carmine Galimi. I'm probably forgetting a few, but all our vice presidents across the board that you guys are working with, all our senior associates, all the support staff at K Properties, our transaction coordinator, our legal team, our finance team, our CFO. When you're working with K Properties, that's what you're getting when you work with us. It's not just that one or two individuals that are calling you and walking through your options, but it's the entire team at K Properties. So that's who we are at K Properties. We work with all the different sponsors. And what happened was over the years, I noticed another trend that, being a specialist and doing the same thing over and over and over and over and over and over and over again, living and breathing it every day of my life, I noticed a trend. And these Delaware Statutory Trust sponsor companies, all they do is put out deals with debt on them. And financing can potentially be a good thing. There's a whole host of things, and we've got other presentations and educational, webinars that we have that talk about the potential benefits of financing. But there's also potential downside and risk. Property values can go down, as we talked about in the disclosures that Nick read earlier. There is risk in real estate, and when you borrow money from a bank, you can lose money, right? If the market value goes down by 20% and you're at a 50% loan to value, you just lost 40% of your equity, okay? And so what the trend was that these Delaware Statutory Trust sponsor companies, these DST asset managers, these sponsors, they didn't like to do deals that were debt-free. Every once in a while, one of them would do one or maybe two DSTs that were debt-free per year. But as we grew, right, as we started having hundreds and hundreds to thousands and thousands of clients doing these 1031 DSTs, we saw a need for more debt-free DST offerings for our investors, because for a lot of our investors, they were at a point in their lives where they wanted to get away from the risks associated with the leverage. They've used leverage over the years. They've paid off their properties. They're now at or near retirement, and they want to de-risk. They want to lower their risk potential. And then these DST sponsors show up and to start talking about how great their deals are. And it might be a nice property. It might make a lot of sense. But when it's got a 40, 50, 60% loan to value, right, if the market turns, if there's disruption, there can be problems, okay? And I saw it back in the GFC, Great Financial Crisis. I saw it during coronavirus. And now we're seeing it again with a number of sponsors that have debt on properties as interest rates have risen to 300 basis points, right, 2-3%. And the price of, the value of commercial real estate, of residential properties has gone down, right? There's just less buyers in the market because banks are charging such a large amount of money to get a loan, right? Instead of a 3 or 4% loan, you're borrowing at a 6, 7, maybe 8% loan right now. And so that puts pressure on current property owners and property values. And so we decided, that our clients deserve better, right? If a client was coming out of an exchange, 1031, and they had a loan they paid off, well, they have to purchase equal or greater value in property size as the property they sold, their down leg as their up leg, the one they're going to exchange into. So we do have on the K Properties platform, with the 25 different DST sponsors, many different properties that have loans on them for those investors that need to replace debt. And that makes sense for that client, because if they don't, then they get hit with mortgage boot, and that's taxable, okay? But for a lot of our clients coming out of their exchanges, they've paid off their properties, or they've got very small loan amounts with their banks. And so, it just didn't make sense for them to go into a property at, 40, 50, 60% loan to value, because that's taking on a huge amount of risk at a time in their lives when they're telling us, we don't want more risk. We don't want to have that risk to our principal of a lender foreclosing on our investment or on the DST. And so we saw years back that there was a need, a dearth in the marketplace for debt-free DSTs. And the reason, why we did that is because of our investors.